And welcome to Insurance in Canada. I'm your host, Rick Padeta. Thank you so much for joining me. On today's episode, we're looking at three stories. The first story comes from Ontario, where the insurance regulator has some advice for insurance companies in Ontario on ways they can improve. Our second story, we look at the top stolen vehicles for 2024. That list just came out. And lastly, a survey indicating what Canadians would rather be doing than look at their insurance policies. So without further ado, let's look at insurance in the news. So our first story comes from Ontario, where the regulator, the Financial Services Regulatory Authority of Ontario, has come out indicating certain areas that Ontario automobile insurers can improve in. So let's take a look at this article. What regulators say Ontario auto insurers need to improve. Ontario auto insurers can improve in certain areas of underwriting, disclosure to consumers, policy servicing, and claims. Ontario auto insurers largely met regulatory requirements this year, but can improve in certain areas of underwriting, disclosure to consumers, policy servicing, and claims, the Financial Services Regulatory Authority of Ontario says in its 2025 Auto Supervision Interim Report. Through on-site reviews of 5 insurers between January 2024 and March 2025, that's a rather small sample size, but okay. FSRA observed 2 broad areas for improvement across multiple insurers: monitoring controls, limited oversight on the quality of information provided to customers during sales through brokers, gaps in data analysis and exception reporting to support underwriting interventions, and inconsistent collection and review of data on insurer-initiated cancellations and non-renewals, and documentation, incomplete records supporting changes to underwriting rules, insufficient evidence of required disclosures and written consent when referring claimants to preferred provider networks, and failure to issue final position letters for certain complaints referred to the ombudsperson. These findings highlight the need for stronger controls, enhanced documentation, and improved oversight to ensure fair consumer outcomes and compliance with regulatory requirements. FSRA says in a report released October 28th, FSRA will conduct additional insurer examinations and take action as needed. Insurers are expected to review these observations and update business practices to ensure they meet both regulatory obligations and the expectations for fair treatment of auto insurance consumers. Each insurer is committed to making the required improvements. FSRA reports, when it comes to underwriting, FSRA found insurers followed approved rules and there was no evidence of unfair denials. However, additional underwriting verification may be causing processing delays. FSRA expects insurers to strengthen monitoring of this practice and support fair consumer outcomes. All 5 insurers have automated underwriting processes embedded in proprietary and third-party quoting and underwriting systems, and FSRA found underwriters with designated authority could override automated decisions. Although individual overrides were logged, there were no systems in place to consolidate or analyze trends such as the reasons or frequency, which could inform process improvements or future rules changes. It also found certain risks were flagged for manual review before binding despite meeting eligibility criteria. That's always been a big issue in automobile insurance. I haven't seen it much lately, but in prior years that was always an issue where even though there was no reason for an insurer to decline insuring a risk according to their underwriting review, for their underwriting manual, for some reason they'd want to do a review in it of that particular risk, even though there was nothing to review because it meet all the requirements for the insurer to insure that risk. They couldn't decline it. But while these referrals did not result in automatic declines, they introduced processing delays that could affect the consumer experience, and that was a big issue, is that the policy couldn't be bound, coverage couldn't be enacted because of the underlying underwriting review delay. For me, it was always just a tactic to try and for insurance companies to avoid trying to insure risks that were undesirable, but they couldn't say no to. If they made this huge delay in trying to bind the policy, trying to convince the client to go elsewhere because it's going to take too long to put the policy in effect. But that was just my opinion. That's just my experience when it comes to these sort of situations, but you don't see them as much these days. I think FSRA has cracked down on it, and other regulators in other provinces as well as cracked down on those tactics being used by insurance companies. There was insufficient data to evaluate referral volume, abandonment rates, post-referral or associated time delays, and the potential consumer impact. The regulator found insurers distributing auto insurance through direct channels and agents had procedures in place to evaluate the quality of information exchanged with applicants, but they had limited visibility into the information shared during the quoting and binding process. For policyholders working with brokers without proper oversight, insurers cannot confirm whether consumers were sufficiently informed about their products. That's kind of the whole point when it comes to utilizing brokers to sell your product. You're entrusting the brokers to handle the sales process, including informing the client themselves. When servicing policies, insurers aren't collecting enough data to analyze when and why they cancel or choose not to renew a customer's policy. Although insurers met legislative requirements by issuing notices with appropriate reasons for cancellations and non-renewals, they did not consistently track the volume of such insurer-initiated actions, limiting their ability to analyze trends or detect anomalies. As well, insurers that referred auto claimants to preferred provider networks lacked documentation demonstrating required disclosures and written consent from claimants were received as required by regulation. In a Denton's Canada insurance law review article earlier this month, the law firm recommended insurers writing auto insurance in Ontario considering the following practices as part of the compliance programs. I'm not going to go read through all of this. It's not really relevant. FSRA's report and associated reviews were part of its auto insurance supervision plan to broaden its understanding of industry practices. FSRA extended its work on the plan until March 31st, 2026. A final report will be released once all additional examinations are completed. So yeah, it's good that the regulators are trying to keep track of what's going on with the auto insurance, especially in the provinces that have private insurance schemes. So every province except for Saskatchewan, Manitoba, British Columbia, and then Quebec to a degree, because auto insurance is a mandatory coverage or mandatory type of insurance that all automobile owners must have on their vehicle if it wants to be used on public roads. Entrusting the insurance companies with that task of providing that product, obviously the insurance companies want to make a profit when it comes to trying to sell that product, but at the other side of the coin, we have the issue of trying to ensure availability at a coverage at a rate that consumers can afford for something that they're required to have. I'm sure if you were to ask most members of the general public about the findings of FSRA, I don't think many people would be too concerned about some of the items that have been brought forth. I think most consumers would be more concerned about such things as claim service, prompt claim service, fair treatment. That's what they'd be more concerned with. However, any aspect of the auto insurance process that FSRA can help improve will help consumers in the end. Next up, Equite Association, which is the association in Canada that is in charge of investigating auto insurance, not just auto insurance, but insurance crimes, trying to keep track. And they also keep track of stolen vehicles in Canada, and they always put out every year their list of the top stolen vehicles in Canada and in each province. And they have recently put out their 2024 most stolen vehicles. I know we're in late November right now, and it seems a bit odd to be putting out a list for 2024, but it takes a long time to compile this information because they're trying to get all the information from insurance companies across Canada, compile it in order to produce this list. So that is why it's coming out now. But so let's take a look to see what the top stolen vehicle in Canada is, and it is the Toyota RAV4. I believe last year was in 2023, I believe it was the Toyota Highlander, but now it's the Toyota RAV4. The most often stolen model year is the 2021, 2,080 thefts. That is across Canada, 554,086 vehicles insured. I don't think that's just 2021. I think that's all Toyota RAV4s. 554,000 with a theft rate of 0.38%. So there are vehicles on this list that have a higher theft frequency rate, like the Jeep Wrangler, 1.03%, but this goes in order of number of thefts. So the Toyota RAV4, top of the list, followed by the Dodge Ram 1500, most stolen vehicle years 2022, followed by the Honda CR-V. Most often stolen model year is the 2020 Ford F-150, Honda Civic, Chevy Sierra, GMC Silverado 1500 series. There's the Highlander, Toyota Tundra, and Lexus rounds up the top 10. That is for across Canada. Toyota products seem to occupy quite a few slots in this 2024 ranking, if you include Toyota and Lexus. The pickups are no surprise. They're always on the top 10 most stolen vehicles, going back quite a number of years, just because they are vehicles that are used quite often to commit other crimes. So that's why you see it there. But let's take a look at the list for other provinces. For Alberta, your most stolen vehicle is the Dodge Ram 1500, 2023 most stolen vehicle year, followed by the Chevy GMC Silverado Sierra 1500 series, followed by the 2500 series, followed by the Ford F-150 or Ford F-350. Pickup trucks occupying the top 5 of the top 10 positions for Alberta. Even the last two, Pontiac Equinox Terrain, GMC Terrain, Chevrolet Torrent. Let's see. Interesting, the Ford F-350 series. The most often stolen model year is 2006, so that's going back a long time, so I'm not sure what it is about the 2006 version of the F-350 that caused so many thefts as opposed to more modern years. I'm not sure if they figured it out, but of course the F-150 most often stolen vehicle years 2023, so whatever they figured out for the F-350, they haven't really incorporated it in the F-150. So that's Alberta. The Atlantic provinces. Number 1, Dodge Ram 1500 series, 2022 most often stolen vehicle year. Atlantic provinces, top 3 are pickup truck, Chevy Silverado, GMC Sierra 1500, followed by the Ford F-150. Interesting, number 9 is the Hyundai Santa Fe. We haven't seen that in the Alberta or the top 10 in Canada. I'm not sure exactly what is making, and also the Toyota Corolla in the Atlantic provinces. I'm not exactly sure why thieves in the Atlantic provinces are targeting Corollas and Santa Fe's. Most of these vehicles that aren't pickup trucks are being sent overseas because of demand for the vehicles in third world countries. I don't know. I don't have a hard time believing Corollas and Santa Fe's are really in demand in those particular countries, but who knows? But then again, number of thefts for the Corolla is 36, number of thefts for the Hyundai Santa Fe is 35, so it's just a strange anomaly for the Atlantic provinces. But let's see the other provinces. Maybe there's something there that we're not seeing. Ontario, most stolen vehicle is the Honda CR-V, so that probably explains why the Honda CR-V shows up in that top 10 list for Canada, just because the number of thefts that occur in Ontario, 1,309, most stolen years 2024, followed by Dodge Ram, Honda Civic, Jeep Wrangler, Ford F-150, Toyota Tundra, Toyota RAV4, number 8, and between that is the Lexus, Toyota Highlander, and Land Rover, Range Rover series at number 10. So interesting that the Hondas, the CRV and the Civic are more popular theft targets in Ontario than they seem to be in other provinces. And lastly, Quebec. Title RAV4 number 1, Honda CRV, Honda Civic. So something going on in central Canada that's targeting the Hondas as opposed to other provinces. Hyundai Tucson in Quebec. I don't think we saw, that was the Santa Fe in the Atlantic provinces, but Hyundai Tucson in Quebec, and a Honda CHR. I haven't seen that vehicle in the other lists. But there's the Highlander. Jeep Wrangler is always a high theft vehicle. As opposed to other Jeeps, you don't see anything other than the Jeep Wrangler on the list of most stolen vehicles. So insurance companies do use this list from the Equite Association when deciding which vehicles they are going to be applying their high theft vehicle surcharge. Now, most insurance companies, you can avoid that high theft vehicle surcharge if you put an approved tracking device on the system, on the vehicle. Tag is the most widely accepted, but confirm with your insurance company that they accept tag or what tracking system that they'll accept in order to avoid that high theft vehicle surcharge. So if you are looking to purchase one of these vehicles that's on the high theft vehicle list, you're going to want to speak to your insurance company first, your broker, your agent, or the insurance company to discuss the ramifications of purchasing one of these types of vehicles. Because of the high theft vehicle surcharge, you could be looking at an additional $500 to $1,500 per year for having one of these vehicles. So that's quite a big hit to your wallet, just because these are the types of vehicles you're interested in. But unfortunately, until auto thefts, even though this year auto thefts have come down by 20%, which is a good direction that the country is headed in, until it comes down even further, the high theft vehicle surcharge is going to be with us for a long time. Insurance companies are quick to react when bad things happen. They're slow to react when the good times arrive. So, like I said, this is the reality we have to face now. So if you're looking at that, one of these vehicles, speak to your broker, agent, or insurance company before you go to the dealership. And lastly, survey from TD Insurance asks what Canadians would rather do than look at their insurance policy. Okay. Canadians would rather sit in traffic than look at their insurance policy. That's not an exaggeration. A new survey from TD Insurance asked Canadians what they'd prefer to do instead of reviewing their home and auto insurance policies for potential savings. More than half, 57%, say they'd rather delete their favorite social media or phone app. Okay, 52% said they'd rather assemble kit furniture. 45% would rather call their boss mom. That's an odd one. 43% would rather do their taxes. 37% would rather sit in traffic. Younger Canadians are even more likely to avoid reviewing their coverage. 76% of Gen Z and 74% of millennials compared to the general populace, 57%. Nearly all Gen Zs, 93%, say they'd hesitate to contact their insurance provider about savings compared to the general population. When asked why, 34% say they just dislike the responsibility. That's baffling. So you'd rather just pay more because you don't want to speak to a human being? I don't get that one at all. Okay, that's what you want to do, but don't complain when you're broke because you're spending money needlessly. The survey of 1,527 respondents comes at a time when many are feeling financial pressures from rising cost of living, yet Canadians are finding other ways to cut back on spending even though they might be eligible for insurance discounts. More than half, 58% of Canadians say they're tired of worrying about budgeting, And when asked how they save extra money each month, 46% say they cut back on dinner delivery or takeout. Another 38% say they skip their morning matcha or daily coffee. Yeah, I wonder what percentage of Gen Zs are in that 46 and 38%. An additional 43% have taken on a side hustle, 30% sell their unused clothing and belongings. Haven't heard that one. 27% return purchases they don't need, and 24% are even growing food to cut back on grocery costs, yet only 1 in 4 have reviewed their home and auto insurance policies for potential savings this year. We know Canadians work hard and are feeling stretched financially. That's why we want to make them aware of the many ways they can save on insurance, said Bruno Jarnig, sorry if I pronounced that wrong, TD's Insurance Vice President, Executive Journey Product Owner. Being more informed about insurance options can help our clients feel more financially resilient and protect what matters most and discover new ways to save money. Chubb Canada, sorry, this next article. Okay, I don't know what to say to this, but folks, your broker, your agent, your insurance company, we're not monsters. We're not going to chastise you for calling us to ask us to try and find ways to save money. That's what we do. That's our job. So I know it's something that happens every year, and maybe you're getting tired of it. But in today's world, how expensive everything is, the cost of living always increases. Any way you can save money is a good way, and insurance is one of those ways. Don't skimp on coverages, please. You're going to regret that in the future, but there's other ways to save money on your insurance other than trying to eliminate coverages, especially important coverages that you don't see the potential now, but you could when there's an actual claim. So, yeah, an interesting survey, but for all the people out there, yeah, take the time, review your coverages, review your discounts with your agent or broker, and do whatever you can at this point to try and save money, but speak with a professional before trying to do that. So thank you very much for joining me today. Please like and subscribe for more. Please follow Insurance in Canada on Twitter/X. And until next time, bye-bye.